Hi Rana, could you share with us the key factors that might impact India equity strategy in 2025?
To understand 2025, you have to understand what happened in last 10 years. When these policymakers came into power in 2014, for the first 5 years, the economy was formalized. As a result, tax revenues went up. In 2019 to 2024, those revenues were put into infrastructure, public infrastructure, digital infrastructure, and given corporates an incentive to capture the manufacturing opportunity coming out of China Plus One. So they have formalized the economy, they have boost capital stock in the economy. The next 5 years, we think that they will focus on labor, whereby skill development and creating more job opportunity. And this is a continuation of the strategy, because a formalized economy with good capital stock will also need skilled labor. So next 5 years, policymaking perspective will happen for creation of labor. From a central bank standpoint, we think that there is enough opportunity to cut rates. So therefore, if you look into the sectors, I think how the household consumption going to grow and how the private sector CapEx is going to shape up will determine much of 2025.
Thank you, Rana. In which sectors or themes do we see opportunities in 2025?
There are certain thematics that we like, and these thematics are based on the long-term beneficiaries of the policymaking. The first is digital. I mentioned that government has now set up a very strong digital infrastructure. Based on that, the digital companies are benefiting. The digital companies in the areas of food delivery, in terms of grocery, they're gaining market share and profits from the established companies. So I think there is a long growth runway ahead, and we remain very positive on that. Second, on the demography, we mentioned that government will be focusing on labor force. So thus we believe that the income of the households will stabilize and then go up. As a result, we can expect more premium consumption, both on the mass end as well as the higher end. So therefore, the opportunity lies in buying the consumer companies which sell more premium goods. Thirdly, this government also has been very focused on deficit reduction. So savings are going up, and Indian savings cannot be exported. So this savings is getting invested into domestic capital markets and real estate. We see plays in financial markets, financial market related companies, as well as real estate companies. Then we talk about manufacturing incentive. Deglobalization is really a theme that is to capture the China Plus One opportunities. We see this theme decisively picking up in the electronics manufacturing in India, and there are several machinery plays available there, as well as in the pharmaceutical manufacturing in the CDMO place. Last but not the least, to support this kind of growth, we need a lot of energy, and this cannot come from fossil fuel. Therefore, government's policy of decarbonization. In decarbonization, the industrial and the utility companies, we find them a tad expensive, but longer term play lies in the downstream beneficiary of decarbonization, like in grid investments. So you see, these are the 5 themes that we like, and these 5 themes have a pretty long growth runway.
Rana, in addition to the 5 themes you've mentioned, what is your investment approach for capturing these opportunities in India?
The Manulife India equity strategy is differentiated, I would say, in 2 counts. Firstly, we maintain a very good balance of the large cap and the small and mid cap stocks. Large caps form roughly about 75% and the 25% by the rest. It is important to have that mix, because often the small and mid cap stocks provide much purer leverage to the themes that we mentioned. That's the first. Second, I would say that our focus on investing in growth companies which generate cash flows for their own growth and reinvest back to growth. So thus we are looking into companies which can be more profitable, scalable, and put their profits back into scalability, and thus consistent with a long-term investment approach.